Good morning, gang. Good afternoon, good evening, good night, depending on where you are in the world. Welcome back to this week's Bitcoin update, as Bitcoin is in price discovery. What a time to be around the crypto space. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor. It's just for educational purposes only. And now we've got that out of the way. Right, we're going to take a deep dive into the Bitcoin chart. I'm going to talk about what I'm looking for next in terms of setups, and I'm also going to talk about some of the trades that we've taken during the week, so therefore hopefully you guys can learn from this. Now, before we get into that, big shout out to our partners over at Prime XBT. If you don't know who Prime are, they are a crypto exchange where you can not only trade crypto, but you can also trade FX, commodities, and stock indices. And if you do use our link down in the description, full disclaimer, it's an affiliate link, then you can get up to a $7,000 deposit bonus. So once again, big thanks to Prime XBT. And just as a side note, these guys are a non-KYC exchange. So if you do live in an area of the world where you struggle to get onto exchanges due to KYC, this is an option. Now that's out of the way, let's make the chart full screen, and let's zoom in, shall we, to the 30-minute chart. So first, let's talk about a couple of the setups that we had this week. And these are what I would consider bread and butter in the group. Okay, this is the sort of stuff that I teach. Two really simple setups. And both setups, both options that we had for trades ended up playing out quite nicely, which ended up being a great day. Did I know this was going to happen? No. Did I bollocks? This could have gone against me. Both trades could have lost. Or I might not have even been presented with the setup. But when the setup does present itself, you take the trade. So let's quickly learn from this. Okay. So what I'm looking for, and this is coming in to the daily modules on the 12th, which was Tuesday, is I'm doing the members live stream in the morning. I'm talking about two options that I'm looking at. Okay, the only two real areas on the chart that I'm interested in, there was a third area, and I will hold my hands up, and it was this area here. However, at the time I was posting to the guys, there was no long from down at this zone. So how did we come to this? Well, first and foremost, you've got to tie in a little bit of extra technical analysis in this, because we had a range. Okay, we had a range, and you can see here from my squiggles up here, this was the initial high. We got the pullback, we came up, we took the high, then we had a big rejection and came back down low. Now, within this, if we're not looking just at the swing failure pattern, even though that's what it was, we had a range. Now, this range, the beauty of, well, what you need to understand, and I'll explain it as best I can. When you're finding a range to trade, okay, which effectively range is just sideways price action. Now, typically speaking, in a trending market, what you will see is you will see a range form low, and then you'll end up consolidating around this EQ, okay? And then likelihood is you continue pushing up, okay? But it doesn't have to happen like this, especially when the market needs to generate some liquidity, okay? So I went back too far. There we go. We can see here. And the bottom of this range was quite simply marked off by a batch of single prints. Now, these single prints went from here to here. Let's just change this up so you can visually see it. So you got some single prints. Now, what are single prints? Now, I want to make this really, really fucking clear. Single prints ties into TPO theory. Okay, what's a TPO chart? This is a TPO chart. Okay, you might see a lot of YouTubers, a lot of influencers using this sort of stuff. Some can use it well, some use it terribly, and some just use it for clout. Now, this is a big part of our trading. Now, we have full sets of modules on how to read these charts and how to help this aid us. Now, what you can see here is you got this batch here, okay? This coloured batch. Now, these are single prints. There's also another batch of single prints underneath it. Now, I'm not going to explain exactly how you treat single prints and what it means, but effectively, quite simply, when price moves through on a 30-minute candle, that's very important. Through an area on a 30-minute candle and leaves a batch of single prints behind, you need to be aware of those single prints. Effectively, what it is an inefficient move. Okay, this is where your standard crypto bros get really horny. They see a really big drive like this and they get really horny. And once again, if price is accepted back into this zone, it likely goes all the way through it quite quickly. Now, what happened? Price got accepted back into this zone and it went all the way through it quite quickly. Okay, so this is how we formulate these trade ideas. So option one, as you can see on the chart, is swing failure pattern of the highs. Okay, initially looking to bring it back down to range lows. Again, held up by those single prints. Now, as we came into these range lows and we got the big buy up and then started moving down. Once again, we did actually front run these range lows. So as I was saying to the guys live in the time, the only way I'm looking to take a long is seeing some sort of market structure break, and realistically price needed to get back above here to get some sort of market structure break. So therefore, it wasn't really a good risk to reward trade, because let's be honest, if you had the market structure break up here, got your entry, well, your stops are going all the way down here, and then you're targeting the range highs initially. Let's have a look. So it's less than half an hour risk to reward. What's the point? There's a completely pointless trade. So therefore, I was more than happy to be patient and wait for the second leg of our plan, which was down here. Now, once again, you'll get people, I'm going to hide this now, get it out of the way so we've got more space. You'll get people that don't necessarily understand how volume works. They may not necessarily understand TPO theory, okay? They're just trading purely based on things like weekly opens, basic SR levels, things along those lines, and Fibonacci. So you got your golden pocket here. Now, as much as the golden pocket, the 618 to the 0.65, is a powerful zone, and in the end, it did end up holding price up on a closing basis on this 30-minute chart. It's not the be-all and end-all, and this is why I trade with confluence. So what I do is I overlap many forms of technical analysis on top of one another to create an area where I am interested in taking a trade, an area of interest. This is how it works. So as you can see here, I'm explaining to the guys on the daily update that I'm not really interested in this golden pocket. Why? Because it's still within that bottom patch of single prints, and that bottom patch of single prints is here. So I'm not interested in that because I won't trade within single prints. Once price got accepted into these single prints, I'm not going to trade in the middle of these single prints here. Now, other traders, other formats will call this a fair value gap, yada, yada, yada. Effectively, it's just rebranding existing terminology that already exists. And quite frankly, it's a bit of a joke. So what you're going to do is you want to see where the volume is. Well, where's the volume in this? I mean, visually, you can see, look, we bounced from the lows, then we consolidated sideways, building up some volume. Then we got the big up thrust. So therefore, this is the consolidation that led to this move here. Now, we can also back that up as well, because we don't just need to look at it visually in candlestick patterns, because quite frankly, that means jack shit. But if we just throw on the volume profile here, you can see, look, where's the volume? The volume is all down here. Okay, you can see here the point of control of this whole sideways price action is here, just below these. Okay, but effectively we can treat all this as a bit of a zone. Now what happened was it didn't come down, it didn't hit the point of control, but we came into this cluster here that held price up. Then it got a damn good reaction. So for me and the guys in the group, we got our long trade. Okay, so we weren't bothered about longing this golden pocket. Could you have done that? Yeah, gosh, could have done. Could have put your stop down below the dominant low, absolutely fine. Then looking up for your range high. You could have got that trade. It'd give you a 1.5 hour risk to reward, but it's still a sensible plan. However, if you really want to maximize your risk to reward, you want to be looking for those more sniper style entries. Okay. And in this case, this was the area. Okay. In the end, did I get filled right at the bottom? No, I didn't. I ended up getting filled slightly up because I wait to see what that reaction looks like. And then I want to see the buy up. Okay. And in the end, we'd already taken at least 75% profits out of this. So, you know, a 10-hour trade, bringing it down roughly a 7-hour trade, give or take, depending on where you did take the profit. And then we had then hedge position coming back up. And in the end, this is the one that ended up running. Okay, so this then got stopped out, the balance got stopped out, back at the top, absolutely fine. And then this one is now running. Now, does this run higher? It could do. But either way, it makes no difference because I've already had a take profit one. So therefore, my stops are now to entry. So this one's already stopped out. This one's still running. If this does now collapse on me and drop right down, which it could happen, it's trading. It's a game of probabilities. We don't know what's going to happen next. Then the rest of this gets stopped out and it's no problem. Then I'll look for the next setup. Okay. So this is how you should be trading. This is smart trading. Locking in those profits, finding the areas on the chart where you get the best risk to reward setups. Then once you've got them, price comes into the area. Does it give you a clean setup? Yes or no? If it does, take the fucking trade. If it doesn't, sit back and wait. Okay. So that's Tuesday's setup. Now, we're now going to start talking about what I'm looking for next. Okay. I'm going to try to keep this as short as possible. By the way, if you want access to our daily updates and you want to understand how to trade like me and the rest of the guys in our members, come over to our website, spitfiretraders.com. Links down in the description. Okay, get a bit of a sneak peek here about some of the modules that's inside. So, for example, as I was talking about all the order flow modules with TPO theory, everything's in there. Head on over to the Join Us tab, and for the whopping price of 79 Great British Pounds, you get access to all of our educational content, plus our daily live streams, plus our evening live streams, which happen once a week, and obviously the private Discord community, where so many chats are shared. Altcoins, Forex, stocks, commodities, Bitcoin, there's just so much stuff going on. So yeah, it'll cost you the grand old price of 79 quid, or $100 if you are a US citizen. Yeah, check that out if you want. Okay, now, following on, what am I looking at next? So let's talk about upside first, because everything, you've got to think about it this way. Everything on a high time frame is still pointing up. Nothing's pointing down. We have not lost any daily structure yet. Okay, if we zoom into this, where we're losing some daily structure, yeah, your first sign realistically of any major weakness based on this would be losing this level here, around 59k. Start losing 59k, then we can start looking at some lower prices. Okay, until that goes, everything's still pointing up. So longs are technically in favour. However, we do have a zone above us right now. Now, anyone that understands Elliott wave theory and fib extensions, shall we say, will understand why this zone's here. Okay, our members know exactly why this zone's here. Now, this is effectively the closest zone on the chart right now to price action, where it's a time of caution. Could we go straight through this zone? Just blast straight through? Yeah, of course we could. Anything's possible. Okay, some of the high time frame areas of interest that I've had back on the charts back down here, it caused no reaction at all. It just carried on going up. So could it do exactly the same thing here and just keep going up? Yeah, of course it could. However, I would still be very aware, very cautious around this zone here. So if we can flip 77k, give or take, then we can start looking for some higher prices. Okay, as long as we are maintaining structure on a daily plus time frame, we can continue looking for higher prices. And then realistically, yeah, you can start looking up into your 80s, into your 90s, and we just take it level by level on the way up. Okay, we find a range, we trade the range. One side will give, whether that's to the upside or the downside. It's as simple as that. Okay, that's what we have to the upside. So that's fairly straightforward. Now, the harder one is looking what's to the downside. So what we're going to do here is we're going to zoom into a 4-hour chart, and we're going to look at this as a trend overall. Okay, so realistically, as we said, 59k down here is when daily structure starts to look a little bit weaker. So ideally, if you're bullish, you want to be staying above this. Okay, so therefore, quite simply, let's just use a fib from the absolute low up to the current high, and we can see here what we've got. We've got the golden pocket in here, ties up with this low here. Is that a good golden pocket? Yeah, it could be, might not be. However, I'd much prefer these lower levels within here. I'd much prefer the golden pocket down to the 786. Okay, some fresh volume down here. Again, if you are a order flow style trader, as in an order block, supply demand, you've got some untested zones down here. And ideally, if price is going to roll down into this zone, then you'd want this to hold. If that doesn't hold, then we've got to start looking down even lower. Now, the easiest way to do this, once again, volume is king. It's the only true metric any of us have on our charts. And again, it's what a lot of traders seem to dismiss, and yet it's the most valuable thing that we have, which is why 99% of our trades are based around volume. Okay, so we can see here, we're looking at this. So this is the volume profile from the 38k low up to the current highs. Okay, just dragged it along. And what we can see here is within this zone here that we've just been talking about, we've got high volume node. Great, cool, happy days. So if this does hold up, then we can start looking for higher prices. Now, if we do start to lose this and it starts coming down lower, then realistically, we've got a little sticky zone here around 56, 57k for easy numbers. However, this zone then becomes more appealing. Why? Because it's the highest volume out of all this move here. It's the highest volume. It's where the point of control is. So therefore, if we are to lose this, and again, this wouldn't be a short that I'd be taking here. I'd just like to point that out, because obviously if we do come back down below that, we could quite easily just wick into this level and move back up. Okay, so that's why I wouldn't short areas like this. This is where momentum traders using the fancy indicators with the red dots and green dots and shit like that all go wrong. This is where they get trapped. But if we do lose this, then this would be my next zone that I'd be looking for longs. Does this give me a setup? Yes or no? Yes, cool. Look for longs. No setup, because no change of structure, no sign of strength. In that case, we start looking down even lower. So therefore, if that is the case, then I'm going to be looking back down here, back down to effectively the origin of the whole move. Now this is the origin. So this is around 42, 43k freezing numbers. I'll be looking for a zone down here. Does it come into this box? Does we start to change from structure to the upside? Does it start looking a little bit more bullish? Are people aggressively shorting down here and not getting any follow through? Great, cool. In that case, you've got your long setup. If not, then you're starting to attack these lows here. Is this possible? You know, this is where people come out with ridiculous statements like, oh, Bitcoin's above 70k, it's never going to revisit 38k again. Yeah, it could do. Anything's possible. You know, everyone said that about the last all-time high. Everyone said that up here when we're at 69k. Bitcoin will never visit 20k again, because obviously that was last cycle's all-time high. What happened? We came down to 15k. There's no such thing as impossible. Anything could happen. Could we make a brand new low from here? Yes, of course we could. Could we make a brand new high from here? Yes, of course we could. Anything's possible. And as traders, we've got to be prepared for all scenarios. If this, then that. All we're doing is we're looking for the areas on the chart that gives us the best probability setups. Then that way, if it comes into our zones, gives us the setup, we take the trade. And from there, we don't care which direction it moves. It's all about the setup itself. That's how you make money in these markets, especially when the market is in fairly easy mode across the board. Not just Bitcoin, altcoins, just the whole market is, you know, the stock market, for God's sake, it's easy. Okay, so obviously if you do want to learn that, come over to our website and then you get access to all our modules. You can see here all our modules are within here. There's loads within each one. Volume, the best way to trade, Elliott wave theory, order flow, figuring out what to do when price does come into your area of interest. There's so much content on here. As I say, it's 79 quid, for God's sake, $100. Cheapest chips, as we say up north. Anyway, that'll do. Hopefully you've learned something today. If you have, let us know down in the comments. Hit that like button, and if you're not subscribed, consider subscribing. That'll do, gang. As you were. Bye-bye.